I only specialize in what I call the really great bubbles.
We have a year or two here to have a fairly traditional bubble losing air, a fairly traditional recession.
Dive into the prophetic words of Jeremy Grantham as he sounds the alarm on a looming catastrophe like no other. Brace yourselves, for the super bubble is on the verge of shattering, and what awaits us at the end is nothing short of an epic reckoning. Jeremy Grantham is a British investor and co-founder of the global investment firm Grantham, Mayo and Van Otterloo. He was born on October 6, 1938 in the United Kingdom. Grantham is known for his value investing expertise and insightful analysis of market bubbles and long-term investment trends. Grantham began his career as an economist and portfolio manager in the early 1960s. In 1977, he co-founded GMO, which has grown to become one of the world's largest investment management firms. Grantham was the firm's chief investment strategist and was crucial in developing its philosophy. Throughout his career, Grantham has been known for his bearish views on the stock market during periods of overvaluation. He correctly predicted the Japanese stock market bubble in the late 1980s and the dot-com bubble of the late 1990s. In recent years, Grantham has expressed concerns about the impact of climate change on the global economy and the potential for an impending financial crisis. Surprisingly, Grantham is also an active philanthropist who donated a significant portion of his wealth to environmental causes. He has been recognized for his contributions to sustainable investing and received numerous awards for his work in the field. Co-founder and chief investment strategist of Grantham, Mayo and Van Otterloo, Jeremy Grantham, is known for his insight and sometimes controversial views on the financial markets. While I don't have access to specific information or statements made by Grantham after my knowledge cut off in September 2021, I can provide some general information about his past warning regarding a potential super bubble and the possible consequences. In the past, Jeremy Grantham has expressed concerns about the market bubbles and their eventual bursts. He has been particularly vocal about what he perceives as unsustainable valuations in various asset classes, including stocks and bonds. Grantham's warnings are often rooted in his analysis of historical market cycles and long-term economic trends. According to Grantham, super bubbles occur when the prices of multiple asset classes, such as stocks, bonds and real estate, become significantly detached from their intrinsic values. He believes that these periods of inflated valuations are unsustainable and inevitably lead to a severe correction or crash. Grantham has a track record of correctly predicting market downturns, such as the dot-com bubble in the late 1990s and the global financial crisis in 2008. However, it's important to note that market predictions are inherently speculative, and timing the precise onset and magnitude of a market correction or crash is challenging. While Grantham's warnings have garnered attention and respect in the financial community, it's essential to approach them with a critical mindset. Many factors influence financial markets, including economic conditions, geopolitical events, and investor sentiment, making them difficult to predict accurately. It's always a prudent strategy for investors to conduct their research, seek advice from financial professionals, and consider a diversified approach to their investment portfolios, considering their risk tolerance and long-term financial goals. As discussed earlier, Jeremy Grantham is a renowned investor and economist who has warned of a major market crash for several years. In his most recent warnings, he has said that the current stock market bubble is the biggest he's ever seen, and that it's only a matter of time before it bursts. He's already expressed his concerns regarding the current state of the market, citing various factors. One of his primary concerns is the excessive valuation observed in the stock market. He points out that the S&P 500, a widely followed stock market index, is currently trading at a price-to-earnings ratio that surpasses its historical average, indicating overvaluation. Additionally, Grantham has highlighted the prevalence of investor euphoria as a worrying trend. Many investors display heightened confidence in the market, leading to a willingness to pay high stock prices. This irrational exuberance can contribute to an unsustainable market environment. Another factor contributing to Grantham's concerns is the presence of reckless speculation in the market. Notably, he is uneasy about the trading activities surrounding the meme stocks and cryptocurrencies. These speculative investments often entail significant risks, as their valuations can be driven more by hype and sentiment than underlying fundamentals. Grantham's apprehensions encompass a combination of excessive valuations, investor euphoria, and reckless speculation, all of which he believes contribute to a potentially precarious market environment. It's important to note that this information is based on Grantham's views until September 2021, and his stance may have changed based on further developments or adjustments since then. Grantham has warned that the current bubble is likely to end in a brutal decline in the stock market, with the S&P 500 potentially falling by as much as 50%. He has also said that the crash could significantly impact the global economy. Of course, no one can predict the future, and it's possible that Grantham's warnings will not come to pass. However, his track record of predicting market crashes is impressive, and his concerns are worth taking seriously. Jeremy Grantham, a renowned British investor and co-founder of GMO, has made several notable warnings about the stock market bubble. In 2021, he emphasized the enormity of the situation, stating it was the largest bubble he had ever witnessed. As 2022 unfolded, Grantham expressed his belief that we were in the final phase of what he referred to as a super bubble, indicating the culmination of a prolonged period of market excess. Looking ahead to 2023, Grantham's warnings grew more urgent, as he urged investors to brace themselves for an epic finale, suggesting that significant market turbulence may lie ahead. His cautionary stance was further underscored by his prediction that the stock market could potentially experience a staggering 50% decline. These warnings highlight Grantham's concerns about the state of the stock market, and serve as a reminder of the importance of careful consideration and risk management in investment decisions. Only time will tell if Grantham is right, but his warnings are worth considering. If you're an investor, it's important to be aware of the risks and prepare for the possibility of a major market crash. Jeremy Grantham, the co-founder of investment firm GMO, is a renowned investor who has warned of a market bubble for some time. In a recent interview, he reiterated his concerns, saying that the super bubble is breaking and the end will be epic. Jeremy Grantham identifies several factors that he considers fueling the formation of a bubble in the market. One of these factors is the prevailing investor euphoria, characterized by an overall sentiment of optimism and a willingness to take on high levels of risk. Grantham believes that this excessive optimism can contribute to irrational decision-making and inflated asset prices. Another factor that Grantham highlights is the presence of excessive valuations in the market. Asset prices have reached or surpassed historical highs, which indicates a potential overvaluation. Grantham argues that the underlying fundamentals may not justify such elevated prices and could be vulnerable to a correction. Furthermore, Grantham points out the prevalence of reckless speculation as contributing to the bubble. He observes a significant amount of speculative behavior in which investors purchase assets without fully understanding their true value or considering their long-term viability. This speculative activity can further distort market prices and increase the likelihood of a subsequent market correction. Overall, Grantham emphasizes the significance of investor euphoria, excessive valuations, and reckless speculation as factors that, in his view, are contributing to the formation of a potential bubble in the market. Grantham believes the bubble will likely burst soon, with severe consequences. He predicts a sharp decline in asset prices, which could lead to a recession. This is going to be an epic finale, Grantham said. It will be a very painful experience for many people. It is important to note that Grantham is not the only one who is warning of a market bubble. Other prominent investors like Ray Dalio and Michael Burry have also expressed concerns. Jeremy Grantham's predictions have brought attention to the current state of the market, highlighting the critical juncture it finds itself in. Regardless of the accuracy of Grantham's forecasts, it's evident that investors should recognize the potential risks at hand and take the necessary precautions to be ready for whatever unfolds in the future. Grantham has specifically warned about several potential outcomes that investors should consider. Firstly, he has suggested that the S&P 500, a widely followed stock market index, could experience a significant decline of up to 50%. This cautionary statement indicates the possibility of a substantial downturn in the equity markets. In addition, Grantham has expressed concerns regarding a potential housing market crash. This warning draws attention to the vulnerabilities within the real estate sector, indicating the potential for sharp decline in property values and associated economic repercussions. Furthermore, Grantham has raised the alarm about the global economy entering a recession. This warning suggests a broader downturn in economic activity across multiple countries, potentially resulting in lower growth rates, increased unemployment, and other negative consequences. While it is important to consider Grantham's opinions alongside other perspectives, his specific warnings underscore the need for investors to exercise caution, conduct thorough risk assessments, and adopt prudent investment strategies to navigate the uncertain landscape of the market. Grantham's warnings have been met with mixed reactions. Some investors believe he's being too pessimistic, while others believe he's right to be concerned. Only time will tell whether Grantham is right. However, his warnings are a reminder that the market is always volatile and that investors need to be prepared for the unexpected. For more such interesting videos, like and subscribe to our channel.